Hey guys, it's Rudy coming at you live from Palm Beach in Florida. Back in my typical old seat, and I thought I'll make a video again. I haven't been very highly motivated to make videos because I've been running races. I've run a few half marathons and a couple of 10Ks and some trail runs and things like that. Kind of kept me busy because I got to put in hours and hours of practice as well. And I've been attending some events and seminars and symposiums and things just to learn so that I can share some information with you. The latest one that I just attended this past week had 4 different tracks: hedge funds, private equity, venture capital, and real assets. Now, most of you will know by now that I invest in real assets. What are real assets? They are things like commodities, oil and gas, silver, gold, etc. They could also include futures like corn and wheat and things like that. But anyway, what I wanted to do today is take a little bit of time and just share with you my sort of investment philosophy. And remember, this is not trading advice. I'm just sharing information with you. Separating the stocks that I often refer to as my foundational longs to some that are a little bit more speculative and perhaps a completely different reason for why I would invest in those stocks at all, which is sort of a hybrid of maybe venture capital and some hedging, and at the same time, obviously, real assets, depending on the commodity that I'm investing in. So what I'm going to do is I'm going to give you a quick overview in terms of my investment thesis, and I called this sort of foundational longs, and these include stocks I've talked about many, many times before, and many of them are going to be familiar to you, but I want to cover just a few of them. So I've sort of picked my top 4 commodity stocks, in specifically energy, that I'm long in. And then I thought I'll add a few micro caps or small caps and show you those stocks, and I'll tell you why I am invested in them or otherwise. So just a quick recap, excuse the pun. Market cap or market capitalization or market valuation, for those of you who don't recall, is basically just the sum of the total number of outstanding shares. That's all the shares, including the restricted stock options and things like that owned by insiders and executives. If you add all those outstanding shares together and you multiply it by the current stock price, then you get the market valuation for the company. Now, of course, because the stock price for most companies, issuers, an issuer is a company that issues stock, because the stock price moves up and down and changes daily, the market cap will change daily as well. Why am I sharing this with you? Because there's a huge difference between my foundational stocks, which are typically at least mid to large cap stocks in terms of market capitalization or market value or market cap, and the micro caps that I sometimes invest in as well. And I'm going to show you a few of those in just a minute. So the market is basically, depending on your jurisdiction or where you are located, sort of typically categorized or broken down as large cap, mid cap, small cap, mega cap, micro cap, etc. And the numbers vary, right? So a large cap company, for instance, in my definition here, would be $10 to $200 billion in market value. But perhaps, let's say, for instance, in the jurisdiction next to mine, so I'm in the United States. So if you think of a country that borders the United States, in this particular example, Canada, a large bank in Canada might have a market cap of, let's say, $80 billion or $100 billion. And in the Canadian market, that would certainly be one of the larger companies in terms of market cap. So these are the ones I'm going to share with you, and I'm going to gloss over the first 4 because I've spoken about them many times. I've made many videos on them as well. But these 4 stocks are my largest longs. Now, when you look at this, you might say, well, Mr. Oxy, if you still call me Mr. Oxy, I've seen some of your videos before, and Occidental Petroleum, Oxy, is missing, and so is Enbridge. Well, I still have long positions in both those stocks. In fact, I have a few thousand shares still in Occidental Petroleum, but it's not one of my largest longs by far. In fact, these 4 that I'm showing you in this pie chart are individually much bigger than my position in Occidental Petroleum. So my portfolio has shifted over the last year or so as I got to my typical 3 to 5 year holding in Occidental Petroleum, which I've spoken about many times before. Now, if you look at this pie chart, you'll see that the weighting on these top 4 stocks is more or less equal. There are a couple of them that are larger than the others, and specifically Energy Transfer right now is actually my largest holding in terms of the value of my investment plus my unrealized gain. In other words, I haven't been selling Energy Transfer, so I haven't been taking profit on energy transfer yet. And then the two other large ones include XLE, which is my parking lot that I've talked about many, many times before. If you want to get into energy and you don't know where to park your money, put some money into XLE. XLE is an ETF. An ETF is an exchange-traded fund. And the two top holdings of XLE are Exxon and Chevron, approximately 20% each. So nearly half of the portfolio is Exxon and Chevron. And then my other position, which is a relatively new position for me again, it's about now getting close to 1 year. You may recall, if you've been following the channel, right at the end of 2022, early 2023, I sold out of Petrobras, took some profit, and exited my entire position. But then over time, I got back into Petrobras and specifically PBR.A, which is the preferred shares. And right now, it's one of my top 4 positions. And the green one here is Devon, which I have also been building over time, obviously, as Devon has been pulling back. So let's take a quick look at each 4 of these individually. And as I said, I'm not going to take too long on these because I've spoken about them many, many times before. The Energy Select Sectors Fund, or SPIDER Fund, XLE, you can buy it today for about $86. I'm not sure where it's trading at exactly because I don't remember when I took the screenshot, but it is from today. And the expense ratio, which is one of the reasons why it's attractive, is only 0.09, so it's relatively inexpensive. Now, being an exchange-traded fund, it does not have a market cap per se, because a market cap, as I explained at the start of the video, are all the outstanding shares, and these are not shares, this is an ETF. So all the outstanding shares multiplied by the stock price. So we can do that for an exchange-traded fund, but we can certainly look at the number of assets in the fund, and right now it's about 36 billion. In addition to the fact that this is a great parking lot, it also pays an annual dividend yield currently of close to 3.5%, which is not too bad, right? So if you think of ETF as an XLE as an ETF investment, earning a 3.5% dividend makes it a sort of high yielding savings account. Not a bad parking place, and somewhere I've put money for many, many years over the past few years when I didn't know which energy stock to buy until another Occidental Petroleum comes along that I can buy for like $10 a share and then get, a 5, 6, 7x on that cost basis. Energy Transfer, what a sweet stock. Originally introduced to me and almost insisted by Bulldogs #1 that I should take a look at Energy Transfer and maybe look at opening a position in Energy Transfer. I did. That initial position was about $7.50. So you can see it's basically doubled from where I started. Currently, my cost base is about $9. I haven't sold any Energy Transfer. In fact, I've been doing the opposite. Every time it pays me a big fat dividend, I've just been reinvesting the dividends into more Energy Transfer units. Why are they units? Because Energy Transfer is an LP. So right at the top of the screen, you can see the big red arrow there says LP. A limited partnership is not amenable to everybody. Based on your jurisdiction, you might not even be able to buy these units. And in addition to that, the taxation might not be favorable depending on where you are. I know Jane from Finland, who's one of our viewers from time to time, has mentioned to me before, it just doesn't make sense in Scandinavian countries to hold a US limited partnership, despite the fact that it pays a massive dividend of 8.5%. So here you can see this is a mid cap, $50 billion in value. It's trading right at its 52-week high. And it has basically underperformed the indices if you look at the stock price or the unit price. But if you add the reinvested dividend, it at the very least sort of matched the NASDAQ. So it's kind of trading along with the index. I like Energy Transfer. I've had it for quite a while, and I don't plan on selling or exiting any of that position anytime soon. Petrobras, I mentioned PBRA, so that's the preferred shares. This company is a large cap value stock based in Brazil. So large cap value in Brazil, $105 billion in market cap. ADR fees, that's something that you need to keep in mind or take into consideration if you're a US tax person. ADR is an American depository receipt. You can get into Petrobras PBR.A. You can actually buy the common for a little bit less than the preferred shares. So at around 16 bucks, it's trading near at 52-week high. And you can see it has comfortably outperformed the indices. So over the last year or so that I've been building back into this position, it has served me really, really well. Devon is hopelessly undervalued. One of the reasons why Devon is so cheap is because right now, natural gas is actually selling at a price that is lower than the cost of production. So it's not an environment where you can easily make a profit if you are in natural gas. Now, natural gas is one of those real assets that I mentioned at the start of the video. If you want to invest in real assets, including commodities like energy, oil and gas, then natural gas would be one of those commodities. And it's a really sweet little subsector of the energy sector to get into. Natural gas, it's super cheap, but you're going to have to be patient on this one. Devon, mid-cap value, it has a market cap of about $28 billion, pays a nice dividend. It's not fantastic like it used to be, and they have a variable dividend, so they have a combination of variable and fixed. And you can see Devon is relatively cheap in terms of its 52-week range, and it's been underperforming significantly in terms of the indices. So when you look at the three I've already shared with you, XLE is pretty much steady Eddie. Petrobras has overperformed. Devon has underperformed. So my energy stocks on the whole are not doing too badly. They are actually doing quite okay. Now, here's where I want to spend a little bit more time. So my largest longs, and these are small to micro cap equities, right? I never really talk about these. I sometimes briefly mention them in my videos, but I never really spend any time talking about them. So why would I be invested in these equities at all? Now, in the first place, this is more play money than what it is, money that I need to really preserve, protect from a wealth protection point of view, an asset protection point of view. So in other words, in the first place, I have some money set aside where I'm willing to take a chance, and some more so than others, right? So these are not necessarily reflective of my mindset when I buy into these small equities, but I do want to give you an overview as to why I'm in them in the first place, or even at all. Now, unlike the energy weighting that I shared with you on the top four, which was equal weighting, on the other side of the bookend, these small or micro cap equities are not equally weighted at all. Now, some of them you might recognize by the ticker symbols at the bottom. The largest position by far, which actually is one of the largest position in my entire portfolio, which is more of a hedge fund style investment as opposed to venture capital or private equity or real assets per se, although Colonial Coal is also a real asset because it's metallurgical coal. But it's my largest position by far, and it's actually one of the largest positions in my entire portfolio. SMDRF, I'm going to talk about that in a minute. That's Sierra Madre. And then I have two others here, which are little slithers, where I hold a chunk of shares in uranium. My largest uranium holding by far is Cameco. Cameco has been an exceptionally good performer over the last year or so. It's up about 100%. So that's my large foundational stock in my energy-related portfolio, which is specifically uranium, Cameco. I'm not sharing Cameco with you here. I'm sharing 4 different companies. Now, why Colonial Coal? I said metals and mining. I briefly mentioned metallurgical coal. Metallurgical coal is not like that ugly, horrible, dirty thermal coal that people use for heating. Metallurgical coal is specifically used for coking and used in order to make steel. Now, Colonial Coal is a Canadian corporation. Its ticker symbol over the counter, OTC, means over the counter. In the United States is CCARF. You may be able to buy it or not. I'm not recommending that you buy it at all. I just want to share information with you. But on this particular stock, if you have the ability to buy the Canadian stock, it's CAD, almost like Canada, CAD.V, because it trades on the Venture Exchange. You can buy it for about $1.58. That's also today's price, approximately. And it's trading sort of near its 52-week high, which was $1.80. And then you can see it's actually nicely outperformed the indices as well. So once again, if I take my example that I shared with you a minute ago about Petrobras outperforming the indices and Devon underperforming the indices, now I add back Colonial Coal, which is one of my largest positions, outperforming the indices. Overall, my portfolio is doing quite nicely, perhaps sometimes just based on 1 or 2 or 3 stocks. Now, what is this big 7X here in the middle? First, I'm showing you it's a small cap blend because of their market cap of $282 million. The shares outstanding about 178 million. Let's call it 200 million just to make it easy math. And what is this 7X, Mr. Roxy? Now, the thing is this with Colonial Coal. They have approximately 700 million tons of metallurgical coal in the ground, which is up for sale. This is not inside information, it's public information. In fact, I interviewed David Austin, the CEO of the company of Colonial Coal, for this channel about a year ago, and you can watch that video if you have time to do so. You'll find it in the library. So where's the 7x? What is it that I'm talking about? So if someone comes along and purchases the assets of Colonial Coal, and let's say they buy it at a bargain basement price of approximately $3 per ton, because remember, it's in the ground, so it still has to be mined. There's 700 million tons times 3 is $2.1 billion. If you take $2.1 billion and divide it by approximately 200 million shares, you're going to end up with about a 10x. I'm being a little bit more conservative, and I'm saying you can probably get about a 7x on this if it sells, when it sells. We don't know if it's going to sell or when it's going to sell. We don't know, right? We have no information, and there's no way for us to predict that. But when it does sell, let's say even conservatively, you could probably even generate a 5x, right? So if you got into it at like $1.50 or so, you can sell it at $1.50 times 5 is $7.50. Cha-ching, right? So a nice little exit there. There's a really good detailed research report that you can read on Colonial Coal from a guy who's much smarter than me, Peter Epstein. And he wrote Colonial Coal, Investor Fatigue Presents a Compelling Opportunity. This is just a couple of months old. He wrote it on November the 13th, 2023. So if you want some more information, you can read about Colonial Coal from ER, which is Epstein Research. And what I'll try to do is I'll put the hyperlink in the description below if I remember to do so. The next one, Sierra Madre Gold and Silver. Now on this one, I'm not really into silver or gold per se, but I am prepared to invest in commodities because they're real assets. And in this particular example, I'm investing in a small cap growth company. It's metals and mining, obviously, because it's silver and gold. It's got a market cap of only $30 million. And what I'm doing in addition is I'm investing in Alex Langer, who is the CEO of the company, who's a very smart young man, and he's very energetic. And he's going to make something good of Sierra Madre over the next 3 to 5 years or so. You can buy for about 20 cents per share. And you can see right here on the 52-week range, it's trading way to the left. So it's at the bottom of its range, and it's been underperforming the indices significantly. Now, one of the interesting things about Sierra Madre is that they own 3 fully permitted properties in Mexico, 3 mines. One of them is called Tepic, and the other one is La Tigra, and the other one is La Guitarra. And the La Guitarra mine is sort of the jewel in the portfolio. The mine was fully operational when it was operated by First Majestic up until 2018. So everything that you need in order to start mining already exists. So unlike the example I just gave you previously with Colonial Coal, where the metallurgical coal is actually in the ground, in this particular example, the silver and gold is also in the ground, but everything that is required to be in the ground, the tunnels, the equipment, etc., plus everything that's required to be above the ground already exists. And if Alex Langer and Sierra Madre and his team at Sierra Madre had to invest in all those improvements and upgrades, it would cost maybe between $30 and $50 million, but it already exists. And the company is actually literally trading at a market cap below just the value of its assets. Now they are guiding to production starting early, like Q1, Q2 of 2025. But I actually saw Alex over lunch last week, and he was saying we might get started in terms of producing sooner than that. So even though they're guiding publicly for production to resume early 2025, we might even see some small production hitting the market, perhaps even earlier, maybe in the second half of 2024. A great location in Mexico. All 3 mines are in Mexico, sort of together in one place. The previous owner of the mines was First Majestic, and First Majestic did not want to accept payment in cash for this divestiture to Sierra Madre. They actually preferred to take stock, and they are the largest owner, the largest single owner, with about 48% of the total shares in the mine. So the previous owner of the mine, First Majestic, is actually one of the largest owners with almost 50%. I have a big chunk of Sierra Madre as well, and I have it in 5 of our accounts that we manage. Fission Uranium is probably one that you've never heard of before, and if you want some more information on this, I can actually post some stuff related to Fission Uranium. I subscribe to the mailing list, so I get a mailer from them once a week or so via email. Oil, gas, and consumable fuels is actually uranium based in Canada. You can buy it for 75 cents. This one is a small cap blend with a market cap of $629 million. And it's sort of sitting just right of center in terms of its 52-week range. It's also nicely outperformed the indices, except over the last month or so, it's pulled back quite significantly. No big deal. This is also one of those where you look to a perhaps medium-term horizon, 5 years or so. What's neat about Fission Uranium is that their assets are located in the Athabasca region in northern Saskatchewan, which is effectively not too far away from Cameco. So in probably one of the richest and highest grade uranium deposits in the world in northern Canada. So here's a corporate overview, which I just snapped from their website. A couple of things. Triple R, the only existing major high-grade deposit in the region, found at shallow depth. That means it also costs you less to mine it because you don't have to dig too deep. The lowest operating cost uranium mines in the world. It should be interesting, once they start producing, assuming they start producing, sometimes a larger corporation like Cameco might come along and pay them too much money just to go away, in which case the shareholders, of course, also get too much money just to go away. Another little one I have, which is also uranium, obviously, is GoviX Uranium, oil, gas, and consumable fuels. This one you can buy for 12 cents. It's got a market cap of nearly $100 million. It's sitting sort of almost slap bang in the middle of its 52-week range. It's been a gross underperformer. I have a very small holding in GoviX and in Fission as well. So they're relatively speaking quite small because my large uranium holding is Cameco. And as I said earlier, Cameco has been a wonderful performer for me, and it's done really, really good. Now, GoviX Uranium is an interesting company. I've also interviewed Daniel Major, who's the CEO for GoviX Uranium, on this channel before. So if you look for it in the library, you'll find it there. He's a very likable guy. He's nice to chat with. He shares great information. They have two primary permitted sites in Africa, right? So now I've already showed you Colonial Coal is a Canadian company. Fission Uranium is Canadian. Sierra Madre's permitted assets are in Mexico, and now we're in Africa. The Madauela project in Niger stalled for about a year ago or so because there was a coup in Niger. I'm not sure if you will remember that the military basically executed a coup successfully and overthrew the government, which put a stop to the project for a while anyway, but now it's kind of starting to get going again. Effectively, although it was dormant, people were still working on site and people were still there, so it wasn't like it had gone away. And in addition to that, the mining companies that are active in Niger, and that includes quite a number of uranium companies, are in close contact with the new government. Whether the United States and other people want to accept the new government or not is a separate issue. I shouldn't comment on the deep state because people chastise me, including YouTube. So I won't say anything about the deep state. Did I just say deep state? Okay, I won't go there. Anyway, regardless of what people outside of Niger feels or thinks, the government that executed the coup, or the military that executed the coup, are now the government. They are in charge, and they will, likely do whatever they want. But anyway, the project seems to be getting legs again. But in the meantime, they have a wonderful project as well in Montanga, which is in Zambia, and that one is actually going along and has been going along quite nicely. So these are interesting companies. They are when you think of a mining company from a real asset point of view, you have sort of three major stages. The company is either in exploration stage, which is kind of like a GoviX or a Fission, or otherwise they're in development, which means they are already, sort of getting to the point where they can start extracting some of these commodities out of the ground and seeing what the quality is and seeing what the market is for whatever the commodity might be. Or otherwise they're producing. In other words, they're just mining full time, and that's what they do. So they fall into different categories. The three uranium companies that I talked about briefly, Cameco is obviously a company that's producing on a regular basis. They have long-term contracts. It's been a wonderful investment for me. I'm not sure how long I will remain invested in Cameco, because over time, perhaps over the next 2 to 3 years or so, some of these small caps like Fission and GoviX might start getting legs, or they might be acquired, right? So they might move from exploration to development and eventually into producers on a full-time basis. The Colonial Coal example is literally a company that I'm buying and holding on to, even though the stock has performed nicely and it's up quite significantly over the last, I'd say over the last 6 months, it's probably up about 60–70%. So the stock itself has done quite nice, but there I'm actually just waiting for the exit. So when we exit, it's possible to get, sort of, as I said, a 5x or something on the existing valuation. So that sort of wraps it up. That's a look for you, or kind of a bit of an insight into how I differentiate my portfolio and split it up between foundational stocks. And then there are stocks that I trade in and out of. Sometimes I don't trade a lot, right? So most of my positions are long, which means I own them. They stay in my portfolio. If I make a decision to buy a stock, I very, very seldom take the other side of the equation and just exit the position entirely, although I do that from time to time. And when I sell, I don't sell little bits. I typically just exit completely and see if I can find another one to invest into, or the same one again, like Petrobras. And then I have the sort of more speculative side of my portfolio, where I'll hold small cap stocks, small positions. In other words, it's play money like GoviX and Fission or whatever, or otherwise where I would buy into something that's more of a speculative position like Colonial. If the stock goes up, that's great. If the stock goes down, it's like I'm going to lose a bit of money if I exit. If I don't exit, nothing happens. But if the company is sold, it changes the equation and the realized gain on my investment quite significantly. I hope it helps a little, somebody, somewhere, right? Anyway, I'll see you guys soon. It's good to be back. Take care. Bye-bye.